Sharma joins us, Director of Finance with Indian Oil Corporation. Mr. Sharma, good morning and thank you for joining us. Can you explain the entire Lubrizol transaction to us?
Actually, Lubrizol, the day before we got the cabinet approval for dilution of our stake by 24%. Basically, this is a joint venture between Indian Oil Corporation and Lubrizol Corporation of USA. A 50-50 joint venture, and we had through this the access to the lubricant additive technology of Lubrizol. And this agreement was expiring. In fact, it has expired in 2014 and was due for the renewal. So we actually negotiated with them. We wanted the latest world-class lubricant additive technologies to be made available, which are not available in India and Asia, and we wanted those to be made available. And at the same time, we also thought of going for a strategic alliance on this agreement and monetize a part of our investment which was made in the year 2000 at a good price. So both the purposes were achieved. We were able to monetize a part of the investment. At the same time, we are able to keep the joint venture agreement for a long term with the latest technologies being made available. At the same time, we have the advantage that our technologies developed by our R&D will also be made available to the joint venture, on which we will also earn the royalty. So it's a win-win situation for both the corporations.
Received for this stake sale?
Pardon?
How much money have you received, Mr. Sharma, for this stake sale? You said the 24% that you sold?
See, our investment in the joint venture in 2000 was 119 crores. So we have sold almost less than half of our holding, and we have actually sold it at a good premium. So we have made more than what we invested by selling the part stake. It's more than 200 crore what we have made.
So that one-time other income will come in this quarter or the next quarter?
The entire transaction processing will take time, so I think it will come in the next quarter.
Okay. Fair point. I now want to talk about your ambitious Capex plan. I'm glad that IOC is finally talking on lines of Capex because of their fuel because of crude prices. When they went up 2 or 3 years ago, oil marketing companies never had the balance sheet to expand. Now let's talk about your ambitious Capex plan. The numbers which we've heard is that you are planning to invest about 2 lakh crore. Can you balance sheet afford that?
Because the 2 lakh crore plan is for over the next 5 to 7 years. And in fact, you look historically, we have been investing almost 15,000 crore every year on our Capex for last 3 to 4 years. And in fact, this year the total Capex will be around 20,000 crore itself by the time we close the March. And next year again it is going to be around 20,000. So with that pace, I think in the 7 year it is very much doable and very much within the normal Capex plans of IOC.
At 20,000 crores per year for 7 years, it'd be about 1,40,000 crores. Just extending out Nikunj's point, you're going a little more ambitious than that with a plan of 2 lakh crores over 7 years. So you're extending your own run rate on expansion.
The 20,000 is the figure today. When you look at the 7 years, the 20,000 may go up to 30 or 35,000 when the year passes. So I think the 2 lakh crore is very much doable, and we have done our back-the-end calculations, and we find that our balance sheet is in a position to support all that investment. It has in fact supported that investment. In fact, if you look the 5 years back, our investment used to be 8 to 10,000, which increased to the 15,000, now to 20. So with this pace, I think the 2 lakh crore is definitely doable. And we have the plans in place.
Can you give me a broad breakup of your Capex plan? How much goes in the petrochemical business? How much in refining, oil exploration? Because IOC is one company which does not have a significant presence in oil exploration, unlike BPCL. So does this Capex include some component of oil exploration as well?
If you broad breakup of the plan is that in the oil exploration we are earmarking almost 30,000 crore rupees for the oil exploration. Another 30,000 crore is being earmarked for the petrochemical, where we are quite bullish and we are investing aggressively. And around 52,000 crore is earmarked for the refining in the expansion of the various refineries capacity, quality upgradations. And this of course excludes our investment in the West Coast refinery, which will come separately in a joint venture. And another 40,000 crore will be spent on the marketing facilities in that period, and around 22,000 crore will be spent on expanding the pipeline network. And there are then expenses on the gas business, where we are already spending the money.
Right, Mr. Sharma, could you elaborate, sir, a bit more on the kind of cash flow trend that you're seeing going forward? I know you highlighted how your back of the envelope calculation supports an aggressive capital expenditure plan.
Yeah.
Could you perhaps, for the benefit of investors and viewers, elaborate a bit more on what the back of the envelope calculation entails, particularly on cash flows that will fuel this Capex cycle?
Yeah. Right now, if you look at our balance sheet, the leverage is very low. Our debt equity is almost touching at 0.4.
Okay.
And the total debt on the company is around 45,000 crore, as against it used to be around 95,000 crore 2 to 3 years back. So we have lot of leverage as it is available on our balance sheet. And looking at the cash flow, you look at the profits of the company in the last year, the 10,399 crore, and the current 3 quarters, it's almost 15,000 crores. So we expect the cash from our general operations, which would be made available to company, should be in the range of 15 to 20,000 crores after considering the tax and taking the impact of the depreciation back on the cash. So that kind of cash flow should be available to the company. In fact, if you look at the current year, most of the Capex plans have been financed internally, including our Russian acquisition, which was $1 billion. Almost 2/3 of that we have financed internally only. And despite that, the debt position is so low.
What are your specific plans for your marketing business? Because it's the marketing business which has turned for OMCs, and it's the marketing business which is now throwing back a lot of cash. You've already expanded there. The petrol stations are making money now. Your spread in marketing margins are decent. So can you give me an approximate sense of where your marketing business is headed, and what profitability can that business throw up in next 2 years?
See, marketing in any case will be the backbone for any downstream oil company. So we give great value to the marketing, and in fact marketing, when the sector opened up, now all other players, private players, including the international players, are knocking at the door. So we have braced up ourselves, we have prepared ourselves very well to face any challenges. And in fact, we are quite confident that this opening of the market will not be able to erode our volumes, and rather we will be increasing our volumes over the years, and whatever we are producing, much more than that we will continue to sell. So we don't see any problem as far as the marketing side is concerned. The growth will continue for the Indian oil, and we have prepared ourselves well in advance for this kind of scenario.
So can you give me
as I said, we are spending almost,
Can you give me a broad number? How much of your profitability will come from your marketing business in near future? What we should expect to hear from you on your petrochemical and refining business? What could be the picture like? But once we know the breakup, we can analyze the trends and then do our calculations.
I will say that it is difficult to actually standardize everything for the years. But broadly, the situation which is now is that almost 25% of our profit is coming from the petrochemical business, which is a very good sign. It's a good diversification step taken by IOC in past years. And marketing and refinery, it depends on the crude oil and the oil market situation in the international market. It depends. At times market contributes a significant part. At times, right now the refinery is contributing a significant part of the profit. and marketing is of course contributing next to the refining. So out of the total profit, if I have to say maybe 40% will be coming, 50%, 40% will be coming from refining, 25% will be coming from petrochemical, and rest we can assume to be coming from marketing.
Right. Mr. Sharma, thanks very much, sir, for taking out the time to speak with us today and elaborate on your ambitious Capex plan. We wish you all the best for the future and how you plan to take your business forward.
Thank you.